What's good, everybody? Happy Thursday. Hope you had a good Halloween last night. Everything was good. Got lots of candy. Everybody's happy. I hope it all went really well for you. Well, this is the Doe Show. We talk about your money, your investments, your personal finances, anything we can do to help you get your dough straight. And man, do we have some big things coming. Oh man, I just can't wait. I'm probably saying it way too early, but whew, big things coming. Anyways, we are financial advisors, Jazz Wealth Managers. We manage your retirement accounts. We are SEC fiduciary registered financial advisors, all that good stuff. And we manage our own portfolios, which we of course share with the open public. Now, today, let's just talk, right? Let's just talk, man. Right? No sales pitch, right? You got the website, I'm wearing a shirt, you know where to go. It's just me and you, right? Let's just talk about how you go from being greedy to fearful when it comes to your investments. And I'm not leaving anybody out today. Short-term trader, day trader, investor, long-term retirement investor. I'm talking to all of you, right? How do you go from being super excited, everything's going well, to holy cow, what's going on? Oh, I'm in trouble, right? Because you know what happened this last market drop here all through the month of October? The markets fell really aggressively, to be honest. I mean, that was a rough time. And I got so many emails from customers, because a lot of our customers are actually active traders as well. But I got so many emails from customers going, do I pull the plug on this stock? Do I add more? What do I do? And it occurred to me that these people have switched from greed, everything was great, man, I'm making money, anybody can do this, man, why aren't I trading? To fear, uh-oh, I'm in trouble, margin call, holy cow, I have half of the amount of money that I started with, right? And so what caused that switch? And thankfully, I've spent a long time actually teaching people how to trade and invest. That was my prior life. And so I've got a chance to see people actually make the switch in real time while it's happened, right? And so one of the things I used to do is I used to actually trade in front of people. Set up shop, go, here's my account, everybody get your accounts up and running. Today we're trading, and tomorrow we're gonna trade, and the next day, and we're just gonna trade together, and we're gonna buy and sell stuff. You can follow me if you want, or you can do whatever you want. And so I had a blast with that because to me, I was just doing what I do. And people used to say, how come you never panic? You lose, you have losing trades. Everybody has losing trades. How come you don't panic? And so I noticed there was a few reasons for that, and I'm gonna apply this to you retirement investors as well. So, what switches you? Come on, think about it. From greed, we gotta do it in red. You gotta do it. To fear. When do you all of a sudden panic? Think about it in the real life, right? What happens? You're driving along in your car, you're headed to a concert, you're all excited, tire explodes. You went from greedy, right? I'm going to a concert, man. I paid up for these tickets. I'm going to have a great time. I got my girl with me, your boy, whatever it is. And all of a sudden, tire pops. Fear, right? What happened, right? Why do people fear the tire popping? Most people should not. It's not that big of a deal. It's a pain, but it's not that big of a deal. You go to fear because, number one, you don't have a plan. So number one, what is the plan, right? You know how when you fly an airplane, or if you know pilots that fly an airplane, they have a plan for everything. Hydraulics don't work. That's not good, right? I mean, you saw what happened in Iowa, but hydraulics don't work. We've got a plan. We've trained for it, right? Landing gear won't go down. That is the coolest thing ever in life. Like, I want to be a pilot on a plane, have the landing gear not go down, and they tell me, all right, here you go, man. We'll be ready there when you land. Like, to me, that's cool. But they prep for that, right? You get to an airport and you have to circle around so many times because of bad weather or whatever. Now you run low on your fuel, you're below your minimums. What do they have to do? They plan for that, right? That's all a part of the deal. When it comes to investing or trading, you likely don't have a plan if you're fearful, right? And I saw this from a bunch of different investors that go, hey, I bought Square, I bought Amazon, I bought name any stock that fell over the last month. And all of a sudden I'm down 14%. I'm panicking over here. The brokerage firm's calling me saying you need to put up more money for margin. What do I do? And so my response is always, where are you planning to sell this thing if it keeps falling? You know what I get more times than not? I get people that say it's a long-term hold. I was hoping to make a few dollars, but you know what? I'm going to hang on to it forever. No, you're not. Because you're panicking. You're scared. You're only going to get more scared. Look at GE, right? People that go, that's a long-term investment. You know, it's struggling. So What is it going to be now? You just going to hold forever? You got to have a plan, okay? And that plan, very simply, we did a whole week on this, so I'm just going to touch on it briefly. That plan has to include what are you going to do if you're successful in a trade, in an investment, and what are you going to do if you fail? You will fail. Did you know that you're only supposed to get 50% of your trades right if you're an active trader? If you do better than 50%, you're better than Kramer. You know, Kramer, the guy on CNBC, only gets 50%, and he's amazing, right? I won't knock him. He does really well, but he only gets 50%. I think somebody did the math, and at one point it was like 52.8%, and everybody was giving him a hard time. And I'm like, that's actually better than the average. So it's not much better, but he's doing better than the average. Don't give a man crap for doing better than the average, right? So what's the plan? If you're successful and if you're not successful, if the trade doesn't work out. Now, let's go through an example, okay? Because I know there's a lot of you watching that have trades right now that are moving against you. Let's say you got into Amazon, I don't know, and it fell 2%. Are you getting out? Ask yourself that. Are you getting out of a trade that moves against you by 2%? No, I don't think any one of us are going to do that, especially Amazon. Amazon's up 2% today. So you see how fast it moves like that. If it moves against you 5%, are you getting out? Well, now we're, maybe, right? If it moves against you 10%, are you getting out? Now you notice how, hopefully, instead of saying, yes, if it falls 10%, I'm getting out. Now you know that that's not the answer, right? The 10% decline is not the actual answer. It could drop 50%. If your position was small enough, you could withstand a 50% decline. However, you wouldn't have that, right? Because there's risk to reward. So you got your risk to reward. You are not going to risk 50% declines to make 3% on the upside. You get what I'm saying there? So as an investor, you are definitely not going to hold for 50%. As a trader, you are not willing to sit back for it's ridiculous, right? You may say, I'm going to risk 8% on the downside, right? I know it's messy. I'm going to risk 8% on the upside, and I'm shooting for 13%. That makes sense, okay? But look what we did. We all of a sudden defined what was going to happen. Now that you know you're going to let the stock wiggle 8%, what's 8% of Amazon? That's going to be, what, 100 and, I don't know what the current price of Amazon is, but it's up $30 today, and that's 2%, right? So 369, let's call it $120. So Amazon can move against you $120 before you'll get out. Now you can go, oh, wait a minute. If I buy one share, that's $120. Well, I'm going to just be careful about my share size, right? So it makes you think ahead of the trade. If you do that, then you go, I'm shooting for 13%. That's a healthy profit. Now it's a matter of just throwing it out there at the point that you think it's time to enter Amazon. Let it wiggle, let it wiggle, let it wiggle. What's going to happen? Right game, right? It's just like a Price is Right game to say, let's see what happens first, okay? So, I guess it's a little bit messy there. Sorry, that was our fault. So having that plan ahead of time is a big thing, okay? So definitely think about that. Number one, you gotta have a plan. And the plan can be as simple as, I'm willing to lose X, I'm willing to gain Y. Simple. Just what is that gonna be? Then you never have to ask the question. If Amazon goes up 13%, you're out, right? Don't call me and say, I was shooting for 13, I'm hoping for 15. But the plan was 13. You got it. Plan executed successfully. If you hold for 15 and the stock falls and you have to take 10, you know how bad you're going to feel about that? If you've never traded or invested in anything before, it doesn't hit home for you. But everybody that's actually done this before, you can be honest. Let me know in the comments section if you held for a higher profit and ended up taking a smaller profit than you initially planned for. That hurts, man. It hurts me just talking about it. Come on. Okay, number two, the second reason you switch from greed to fear is you don't know the investments. Do you know what you're investing in? And I don't mean it's an index fund. Okay. Oh, it's Apple. Everybody knows Apple. I got the phone, right? I don't mean that. Do you know the behavior of the investment? Do you know how it normally moves in different periods of the season or of the year? Is it cyclical? Is it not? right? Does it typically have, move in sympathy with other stocks in the sector? For example, if Coca-Cola reports horrible earnings, you know Pepsi's taking a hit, right? At least a little bit. If you look in the semiconductor space, that's actually a really good example. You got KLA-10 Core, Akamai. Look at the big differences in those two stocks. Look what happened to MU, Micron Technologies. It briefly took down Intel just because they reported bad. Intel got hit with it as well. You got to know that as far as the investments go. So do you know what you're messing with? If you're playing with shares of a stock, you know, well, basically one share. If the stock moves up $1, I make $1. Simple as that. If you're trading options, do you understand how that works in increments of 100, but you're talking about pennies now? If you're trading futures, do you know we're talking about ticks, and every single futures product has a different tick? You better know the tick there, right? Really better know that one. If you're trading foreign exchange, do you know where you're at? Do you know what size lot you're starting with? Do you know the leverage behind the size lots that you're starting with? And then do you know let's say it's the dollar yen. If you're playing the dollar yen at 2 o'clock in the afternoon, our time, Eastern time, New York time, right? Do you know what to expect from it, right? There's a huge difference between doing that and playing it at 9:30 at night, right? Eastern time. Anyways, you got to know the investment. You know why? Because then, number 3, come on, I was going to use a different color. The third thing that switches you from greed to fear is not knowing what happened. What happened when the stock moved against you? What happened when things got a little volatile, right? If you don't know the investment, then you don't know that today Amazon being up 2% represents $32. However, the average move for Amazon is like 80. What is it? Do I have it on this screen? $87. So the fact that the stock is up $32, at least as of last time I checked, actually doesn't mean a whole lot, right? Because the average is in the 80s. Now that's going back 30 days, of course, so October was a little bit messy, more volatile. But for you to see a stock, let's say you were short Amazon today, and it moves $32 against you, do you panic, right? Probably not, because you know it's well inside the average. This is a normal day for Amazon, nothing special to see, right? So if you don't know the investment, then you're going to go, what happened? Amazon's up. I was hoping it would fall, if that was the example. You may panic and make a decision. You've now switched to fear. You're no longer thinking of, those positive thoughts that I've got the right entry, I know where I want it to go, I've got how much I'm willing to let it move against me, and it's a reasonable amount to move against me. I know what my profit target is, and so therefore, what happened today? Amazon just had a normal day. Nothing special, right? And so immediately your brain goes back to, I got this, come on now. Let's move on to another trade. What else can we do? What other investment can I look at? Look at Warren Buffett when he was in Apple. Everybody panicked in February. Go back to February this year. Everyone was panicking. Stock market fell really quickly. You think October was bad. This was just a brief blip down 4 or 5 days. And it was, I think, 10% down on the NASDAQ. Everybody was like, oh my God, what happened? Nothing. The market just pulls back. I mean, these things happen. Swings go up, swings go down. Roller coaster goes up the top of the thing, wiggles around a little bit, comes back to the train station, right? So you look at something like Apple. Apple got a little volatile. The whole market got a little volatile. And Warren Buffett's like, these things happen. So we found out later that he bought a god ton of Apple shares, right? The stock's been higher ever since because he knew what happened. What's he doing right now? I keep making this joke that, where's Warren Buffett? I hope everything's okay. I got to go to his house in April. Not in it. He didn't invite me over or anything, but I got to go to it. I posted pictures and everything just to walk by and see it. He wasn't there. I get nobody was there. I mean, security guards were there, but it was like, where's he at now? The markets for the whole month of October have been crazy declining. And do you see Warren Buffett tweeting? I don't know if he tweets, but do you see him on TV going, well, I'm optimistic about this or that, or I'm buying this or that? You didn't see the brother at all. Where was he? You know what? He's in there. He knows what happened. He knows this market falling presents a slew of opportunity, and the man has more cash than you will ever even be able to smell in your lifetime. He's got it sitting there. I guarantee you, I'm not allowed to say that word often, I guarantee you he goes, I know what happened. People are panicking. And every time he says, when people panic, you go in there and buy. Just do it over and over and over again. You can't do that if you're in a fear state of mind because you don't have a plan, you're not sure about the investments, and when the question comes up, what happened, you don't have the answer, right? Never, ever put yourself in that position. Know what you're going to do if the markets go up and if they go down. I always tell our customers here at Jazz, if the markets go down, number one, you're not going to sweat it. You're cool, right? You got the towel. If you're one of our customers and you need that towel, I'll send it out to you, of course. But you're not going to sweat it, and you're actually going to cheer the markets lower if you have a long time until retirement. Because the plan is you are going to buy more of the investments, and when everybody else says, what happened, you're going to be like, gimme, gimme, gimme. Come on. I'll take more shares. They're not all going to be winners. I'm going to take more shares. I want to buy more into my retirement, just like old Warren Buffett. He invests when things get a little weak, right? So have that plan. Stay in the greed portion where you can look forward optimistically to your future, whether you're a day trader and that future is the next hour from now after lunch, right? Or if it's going into the end of the week and you're one of those type of traders, or if you're investing for 35 years, right? Stay in this column. And I joke, and I don't do this because I'm trying to promote anything. I sort of laugh that all of our customers, a few of them here and there, a few customers here and there have never been through this before, and they want to just make sure, wait, this is okay for the markets to fall? But everybody else, they didn't bother me. I got more emails from people going, woohoo, the markets are falling. Dustin, should I increase my contribution? How awesome is that? Those people get it. Unfortunately, if the whole world figures that out, the markets would never fall again and we would all just continuously pay higher and higher prices. So we need people to be fearful. But I don't want you guys to be fearful. In order to do that, have a plan. What are you going to do if this happens? What are you going to do if that happens? Look, the easy part about this plan, by the way, is stocks don't go backwards, right? We used to tell the traders when people would say, I'm having a hard time, I'm not making any money, they call it a book. My book is flat and I'm having a hard time. What should I do? And sometimes the simplest thing was the answer. We used to just say, number one, you got this, right? You got the plan. I've seen your plan. I know it's good. Could be the environment right now, the way things are going. Number two, remember, stocks go up, stocks go down. They don't go backwards and they don't go diagonally backwards. So you only have this to figure out. Just start with that, right? And it's so funny because the only game that we have to play is higher or lower, right? It's like the Price is Right. Just say higher or lower. I'll name a price and you go higher or lower, right? There are extremes where you can sort of guess it easily, like the market's falling recently. I mentioned some of the different sectors of the market in the closing beat, but that makes it a little obvious. Then things flatten out for a while and it gets harder to guess higher or lower. So stay in the greed section, have a plan, know your investments, and when people go, what happened? That won't be you. You're going to be telling your friends, you're going to be telling everybody, you know what happened? The markets moved, right? It's what happens. Now, sometimes the markets move because more people get fearful. The pendulum swings over here too much, and people get more fearful, so things get a little crazier. And then the pendulum will swing back. Look what's happened here over the last 3 days. And people get greedy again, and all of a sudden, just like that, we've just changed our minds. Yep, that happens, right? Anyways, that's all I really have for you. I didn't mean to take too long. I could talk about this stuff for hours, but that's it. Yeah, hopefully GE does make it. Of course, you want to cheer on a company like that, not just the stock price, but the company themselves. And maybe the new guy, Mr. Culp, can figure it out. So we'll see. Got the new CEO there. What about your stop losses being hit and then the stock shoots off? Robert, great question. Leans more towards the trading side of things, but that's a great question. And it's an unbelievable, great thing, believe it or not, that can happen to you, right? We used to get this all the time. People would go, I would have been profitable, right? You buy a stock, right? You say, I'm going to get out if it goes right here. This is it. This is my line in the sand. It goes up a little bit and then goes like this, only immediately to take back off again, right? Sounds like that's happening to you. It does happen. This takes you back to your stats. How often does that happen? If that happens too much, you know what you got wrong? Number two here, right? You don't know the investment. So it could be like on an Amazon. you got in Amazon and you had a $30 stop loss. Let's just say that's the number you picked. That's not going to cut it. I know that from experience that a $30 stop loss, meaning from here to here, your loss is only $30. You said if that stock drops $30, I'm out. That's not enough for Amazon. This will happen, okay? If you said, I have a $30 stop loss on Ford, I would laugh at you. Is that possible? It's not possible. But if you said, I'm going to allow the stock to wiggle as much as it needs to, that's ridiculous. Because you can't get your size big enough. Of course, you guys know the idea behind that. So that's something you want to track, right? So when your stop losses you find are getting hit very quickly, you want to look at the average range of the stock. You want to look at the volatility of the stock. Go back 6 months if you have to. If it's a seasonal type thing, like if it's a retail sector going into the end of the year and the beginning of the next year, you're going to need to give it a little more room. So you want to know that, you know, how much room to give it. It's just like football or sports or anything. You study the team. You study the team in the environment that they're used to playing in, and you study the team in the environment that they're used to losing in, and then you hope for that, and you go for that. That's your game plan. So that's a great one. Stats. Now it could be as simple, Robert, as going, how many times did my stop loss get hit and then take off higher? So this would be hit and then was lower, hit and then was higher. And you could just simply go, all right, I'm going to name the stock price, and then I'm going to put a tick mark. It could be as simple as that. It's just a starting point. How many times did something hit my stop loss and go lower, which means that was a successful spot? And you just start adding them up, right? Name the stock, name the thing, and eventually you're going to see, wow, Amazon hits my stop and always goes higher. What's my stop? $30? That's not going to cut it. So that's it. You think Warren Buffett's buying a lot of Apple this time around? I don't know that he would dip back in there. He's got a lot. See, in February, not everything tanked, right? So in February, there wasn't as many opportunities. I think he might have found there was a lot of opportunities there. Profit to loss ratio. Great question there, Daniel. So I always start with your time frame. If you're a day trader, then your profit to loss ratio better be 3 to 1, right? If you're a longer term investor, you still want obviously as high as possible, but you can afford to fudge that a little bit. Day traders got to be 3 to 1. Unless you're really, really quick, right? You could be 1 for 1, but you're always a moment, not 1 for 1, like 1.2 to 1, 1.3, something like that. You can cut it tight, but unfortunately, you'll always have that in the back of your head that you're 1 step away from having to find a job, right? So I wouldn't advise that, but you could. During these volatile times, very normal for traders to sort of go on to plan B. Plan B is to just buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, right? Because stocks are moving around, wiggling around, everybody's panicking, volume's crazy, just buy and sell, buy and sell, buy and sell, buy and sell. So very common for that. Used to be really popular actually, but I don't know why anybody doesn't do it anymore. Yeah, we got Apple reporting earnings. Here's a good example of knowing your investments. Did I tweet this? I put this on Instagram earlier. If you want to follow us at Jazz on Instagram or Twitter, it'd be great. A lot of you come into Instagram. I appreciate that. Apple. How many times does Apple report a beat on earnings? What's the answer? 88.2. So 88.2% of the time since Apple has reported earnings, their earnings per share beat 88.2% of the time. If you have to make a bet whether they're going to beat or they're going to miss, what do? Right? Seems pretty obvious, right? Or at least you protect, right? If you're going to bet the opposite direction. 76.8% of the time they beat on revenue. Apple is a buy the rumor, sell the news type stock, right? So when they have these events, did you notice the other day on Tuesday or whatever it was, they had their event, they came out with the iPad, everything was great. You notice how the stock just kind of sat there, right? Every time it tried to blip lower, it would sell off. It's because Apple is a buy the rumor, sell the news type stock. Always has been. That's what I mean by know the investment. Did you know that the average move when Apple reports their earnings, the average move is 5%? I believe it's 5.17 if I remember right. 5.17%. That's not what you're going to gain. That's the move from the high to the low for the day. It may finish only up. It actually only ever finishes up about 1.5%, right? So you look at that and you go, oh, earnings come out, stock moved 1.5%. No, it didn't. The stock shot up a certain amount, went lower a certain amount inside of a range of 5%, and ultimately only finished up 1%. That's a buy the rumor, sell the news stock. And that's just a couple numbers that I remember, hopefully that are somewhere close to correct. I know that one is, and I know that one is. So that's what I'm talking about, right? That's what I'm talking about. 30% gain versus 10% stop loss. No, your win versus your loss, right? Your dollar amount. I'm talking the dollar amount for the short-term trader. Your stop loss has to be whatever is relevant for the stock. Never have a win-loss ratio of a percentage as a plan. I don't know if I said that right. Because your stop loss for Ford is going to be different than Apple, right? You're going to need to give it a bigger amount. The percentage is going to be bigger on Apple, Amazon or whatever, than it is on Ford. So don't operate from a trading plan standpoint of saying, I will always give a stock a 10% stop loss. Might not be necessary. Correction and the start of a bear market. Well, one is index related and one is GDP related, right? Or recession, if you're going to use the word recession. How many times should you sell your profits before you completely sell out completely? Meaning a profit target. If you mean on the way up, I'm a big fan of 2 profit targets, because you never like to leave a good game, right? So if everything's going well, you should have a spot where you're going to take some off, lock in some profits, and maybe bring your stop loss to break even. Why are we talking about trading all of a sudden? Bring your stop loss to break even and then let something ride if you can. You never like to be successful on something and then just run away from it. If you can piece out of it, and that's part of your plan, that allows you to raise your stop at the same time, Henry, that's what I would do. Nick is done, man. October kicked his butt. Nick says, I'm out, man. I've had enough. I'm not investing anymore. What you going to do, Nick? You going to do a little Bitcoin? You going to go flip some houses or something? Where can we get all these percentages about earnings moves? Just stay up all night and read, right? Like, I'm sick because I don't sleep. I should sleep, but I have big plans this weekend. And so when I'm not doing what I need to do for you guys, I'm studying. I study stuff nonstop. I read earnings reports. I read the fundamentals. I go through all kinds of stuff. It's geeky. I don't share it with you guys as much. I've been testing it to see if you guys like it. If it's more stats related and I can give you something to take home, great, but I'm not just going to ramble. You notice how in a closing beat, I don't ever go, oh, they beat, by 33 cents. They were expecting 2.33. It came in at 2 or whatever. You get what I'm saying. It's just kind of like, Okay, that's what I'm going to finish up with there. Greed and fear, right? This game is greed and this game is fear. Stay away from fear. And now you know the way to stay away from the fear side of things, because if something moves against you, you're out anyways. You took your lumps. You moved on. If you take stop losses, they're actually really, really good for you, because if you take stop losses, you can measure how good or bad you are. If your stop loss is always under a pivot low and you use charts and that's the way you decide to do things, and you keep getting stopped out, then you suck at picking stop losses. Don't use a pivot like everybody else does. So you get the idea of how to measure. If you only buy and hold, you will never know how successful you really are, right? If the markets keep going up, we all look like heroes. I get it. I've been through a few of these now. But we've now entered a market where your study time, your statistics, your wins versus losses, and your ratios are all going to weigh on whether you stick with this game or if you walk away like that, whoever it was up there. Who said they're done? Who was it? Nick. Or if you run away like Nick, right? So you got to do a little homework. Look, you're competing against a lot of the smartest people that exist on the planet. Not taking anything away from doctors, lawyers, or politicians, but you're competing against guys that study this stuff nonstop, computers that are programmed nonstop. Why would you think you could just buy something and then sell it for a profit on a repetitive basis from your phone? Like, you get what I'm like? I'm not knocking you. I mean, there are people that do it, but why would you think you could step into this arena with Mike Tyson, the young Evander Holyfield, things like that, and just start whooping up on these people? You better study. you better do it. Anyways, I will help you as much as I can along the way. In the meantime, I've got to get back to work. We'll do the closing beat later at 5 o'clock. That's our stock market update show. If I helped you in some way, hit that subscribe button. That really helps. I'm hoping to give a lot of these talks to the industry. And so in order to do that, you got to be somebody, and I'm nobody yet. So I'm hoping to be a little somebody, if that would make sense to you guys. Help me out there. If not, no problem. Thanks for watching, and we'll be back at 5 o'clock for the closing beat. Enjoy. See you.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.